We've got Harshit Kapadia from Elara Securities joining in on the show right now. Harshit, hi, morning. Just wanted to understand how the revenue math and margin quality is going to pan out post this alliance for Vivo and Dixon.
So we are expecting close to around 1 crore, which is 10 million to 12 million mobiles to be sold this year through Vivo for Dixon. That itself would add close to around 20,000 crores of revenue in this year itself, with a EBITDA margin of close to around 500 odd crores and PAT of close to around 350 odd crores for Dixon. And to a ramp-up phase, what we understand is that they can touch a high of close to around 2 crores or 20 million, which could be somewhere closer to FY29. That's what we understand the ramp-up would be.
Right. Harshit, how quickly can the ramp-up happen, say, from an FY27 standpoint? What's your estimate? Hi, this is Harshit. What's your estimate from an FY27 standpoint? Give us a sense in terms of units or revenue contribution.
Sure. So if you look at in terms of units, so we had built in Q4 in terms of revenue close to around 2 odd million as far as Vivo is concerned, which would get ramped up to close to around 8 million. Now with them starting factory probably towards the end of Q2. So that is what we estimate. So we have close to around 7 to 8 odd months with Dixon to manufacture Vivo mobiles. So that is how we look at, and that would add close to around, assuming an average price of 20,000 rupees, that would close to add around 16,000 odd crores of revenue for Dixon. It's this itself here.
And what is the kind of impact on EPS for that?
So EPS, so overall, this is not part of the PLI. So earlier, the margins that these guys were enjoying, it's going to come down starting this financial year. So we're expecting a margin close to 2.5 odd %. So that should add close to around something like around 350 odd crores of PAT, which would be close to around 3 to 4% in terms of EPS upgrade, which can further come for the company.
Harshit, wouldn't there be a client concentration risk? Do you sense that for both Vivo as well as Dixon?
No, if you look at Vivo, so see, every Chinese company has now around at least 3 to 4 manufacturers of mobiles in India. For Dixon also, so if you look at Dixon has close to around 9 to 10 odd clients. So it is spread across the Chinese as well as American companies are there. Some Indian companies are also there. So it's fairly spread. Yes, of course, Vivo coming in would have a higher share, given that they are becoming a large part of this universe. So, but it is still fairly spread over. We are not looking at more concentrated like it has for other non-listed players, non-listed EMS players.
The company was earlier guiding for flat growth for the smartphones, and this would add some volumes for this FY27 and 28. But there is still a client concentration towards Motorola, where the volumes are dipping. How do you look at that?
See, Motorola was concentrated, but they have added recently iSmart 2 as well. So there are a couple of more names that they have added, which is giving them little bits of lesser concentration. So Motorola was mainly concentrated on export related. It was not India focused in terms of contribution. But with Vivo coming in, that concentration will get further spread. We are right now still looking at a marginal growth in volumes. As far as mobile volumes is concerned, but the realization, if you look at the per realization of mobile, has increased substantially. So earlier we were looking at around 15,000 rupees a mobile. Right now we are looking somewhere above of 20,000 rupees a mobile. So probably volumes may remain flattish to a marginal growth, but value growth will be far substantial for Dixon going forward.
I wonder, Harshit, you gave a PAT number of around 350 crore. But the Dixon component of that PAT is 51%. Should one factor that in as well? Yes.
Yes, absolutely. So 350 crores is the overall number, but the Dixon share would be 51%.
Understood. Understood. And with regard to the ramp up, right? The ASPs here are higher. The margins of 2.5% is on a higher ASP as well, right? The ramp up next year, you expect the full around 2.2 crore phones in terms of units produced, and therefore next year's growth will really be the standout?
No, I do not think it will be completely 100% utilized next year, because it generally takes some time for things to ramp up in terms of installation of machines, etc. So I think maybe by FY29 is where we think the complete ramp up should happen in achieving that particular target.
All right, Harshit, thank you so much for joining us. Great having your perspective on a day like this.
Thank you.